What's going on, guys? So I wanted to make a quick video just talking about how to buy the dip, right? We hear this phrase thrown around all the time: just buy the dip. Buy the dip, buy the dip, buy the dip, right? So I want to talk about, is buying the dip effective? And if so, is there a wrong way to do it? Is there a right way to do it? So let's go ahead and look at this, for example, ticker symbol CHGG, which is, Chegg. Which is a company where it really doesn't matter what they do, but essentially it's just a company. We'll just look at the charts, right? So I also have something pulled up right here, which is an illustration that I found online, and it's just going to help kind of just explain what we're talking about today, right? So we see, two different types of buying the dips, right? We see where every time it goes down, buy the dip, down, buy the dip, down, buy the dip. But notice how, on the right side, we have, again, buying the dip, but at different places. Notice how we're seeing buying the dip at this area, buying the dip at this area. So why, is this labeled as the wrong way to buy the dip? And why is this labeled as the right way to buy the dip on the right, right? Now, it's overall on the long-term perspective, if you're investing, then, both of these people, they're going to be making the right decision by buying the dip, right? Overall, if we're, investing for years and years and years, then buying the dip anywhere is fine. However, the person on the right, is buying in with a much better price with a higher probability of success because, they were patient, right? Now, why, what makes them more patient than these people? These people waited for the dip, they bought the dip, right? Well, the thing is, the person on the left, they see the dip and they immediately start buying blindly while hoping that the value goes back up, right? And then the person on the right, with the difference that they're doing is they see the dip, right? But they wait for a reversal and get in at a better, price because they have confirmation. So if we take a look onto the left, we see it goes down. Oh, that's a dip, it just does dip. But they're just buying randomly at any dip, right? You could buy here at the dip, buy here at the dip, buy here at the dip, but it's still going down. Versus the individual on the right, they're waiting to buy the dip. And then, you see how this is the dip right here. We see an uptrend, a confirmation that things are going up. Then you buy in. That's the proper way to buy the dip. Same goes into here. It dips down, dips down, dips down. But guess what? After these dips and it starts going back up, now we're buying because confirmation of an uptrend. Notice how there's an uptrend here and an uptrend here, right? Now, again, if we're looking at it from a long-term perspective, buying the dip, if you're investing in something, it's going to be fine, but the person on the right is still likely to have a overall better return, right? Because trader one is going to, run out of money by blindly buying the dip while, the stock is going down instead of waiting for a reversal or confirmation. And not only that, he just bought it at a much higher price than, they really need to. And then on the other hand, the person on the right came out on top because, they're buying the dip after a confirmation of reversal. They're not just buying in, at the absolute bottom, because we all know the dip can get dippier, right? So something I want you guys to take note of is that, when it comes to trading, it's, about probability and not certainty, right? So that's just one thing I want to bring out. But let's go ahead and back to the charts because, it's easy to see this on a little line chart. It looks like this illustration is kind of taken off of Robinhood, the way the line charts look. But let's go ahead and look at this chart, right? We could see this all the time. We see this is a big sell-off. This could be considered a dip, this area over here. Would we buy the dip over here? Certainly not, because there's not confirmation of having an uptrend. We're not, seeing signs of anything going back down. So notice how even though there's a dip here, things get dippier, right? And then we see, it comes up a little bit, but then things cut dippier and dippier and dippier. So you could have just been averaging down, buying the dip, but I mean, it's still going down, right? And maybe you're not someone that has enough capital to just continue buying the dip, versus if you're patient and you wait for it to go down, and we see that this is confirmation. Now, how do we identify this as confirmation? Well, we're using a moving average, right? We see this blue line over here. That's the exponential moving average, specifically the 9-day exponential moving average, right? So we have this, indicator over here where when the stock, price action goes above it, then that just signifies that things are going on an uptrend. So as we see, going down, we see that it's pretty much below that exponential moving average, signifying that the dip is probably going to keep going down until we see this area over here where it dips and then we cross over, and now we have a confirmation of an uptrend. So we could have bought at the dip and then boom, sell at the top. Well, there's times where if you're investing long term, you buy at the dip, it goes up and it came back down again, but guess what? There's something called averaging where, guess what? This was the dip, but then we saw another confirmation, so we bought in. So again, you're getting in at a better price because, you could have just been buying the dip here, buying the dip here, buying the dip here, buying the dip here, but you're averaged in at all these high prices on the chart versus when you wait for confirmation, you're buying at a really great area because once this starts going up, you bought only 2 times at these low points versus someone who bought like 3 times at these high points. So that's just something I wanted to kind of make a quick video on. That's why I didn't really show my face on this video. But, I just thought it was really helpful, especially because we hear a lot of, this term being thrown around of just buy the dip, just buy the dip. So if we're going to, use that, then of course, I just want to help people. Hey, maybe you want to wait for confirmation after the dip before you buy in. So hopefully you guys like this video. Make sure to share it with anyone, any trading friends you have. This video may help them. Also consider hitting that like button because it really does help out with the YouTube algorithm. And as well, check out the links in the description below because one of the links is going to be a link to my free Facebook group. And it's just a community that I'm building of individuals interested in trading and investing in the stock market. And then on top of that, guys, if you guys are wondering what platform I'm using to trade, this is simply the Webull platform. Again, not a platform you absolutely have to use, but if you want to look into using this platform, click the link in the description below. There is a promotion going on where if you deposit $100, you'll be eligible to receive 2 free stocks valued anywhere up to $2,000. So you never know what free stocks you'll get just for signing up with this platform. They have a lot of great tools, and I mean, look at it. It has a great, amazing chart. So it's really all you really need. But with that being said, guys, thanks for watching, and I hope to see you on the next video.